Today, let's have a great trade practice to improve our skills to the next level. We will go over a full top-down analysis by using smart money concepts and price action. We will discuss how to spot trade areas and how to make possible trades. If you are good to go, let's do this. Let's talk about a couple of simple tips and tricks when it comes to multi-imbalance points. As you know, these are very important price action concepts that help define our main points of interest when we are trading. But sometimes price can completely crush these areas and wipe out to imbalances with no reaction at all from the market. This is why I always say that if you are using only a single time frame, you need to be extra careful and be more selective. In general, what we really want to see is a little bit of a struggle and a station in these areas before making any decisions. That could be things like rejection wicks showing up, or even a swing failure pattern forming as a clear concept. To me, this usually means that traders on the opposite side are reacting to this level and considering a possible reversal point. One of the best ways to look at the charts is by opening up the lower time frames in these areas and watching how the price behaves here. You want to see if price keeps making new higher highs, showing that buyers are getting control. Basically, you are looking for an inner upward trend developing so you can eventually join the stronger side of the market. For example, Ethereum had a really great setup recently. I know a lot of you probably took this trade as well. There was a strong price push through these levels, creating this clear multi-imbalance area. As you can see, price pulled back into this multi-imbalance zone, but at the same time it formed a multi-swing failure pattern at the exact same level. So the price was clearly being rejected from that area. As a clean target below, we had the PDL, which is the previous day's low level. This made it a complete and a very clean example of a high quality trade setup. However, if you look above this area, you will notice multiple bullish imbalances sitting overhead. I think this also looked like a solid area someone might consider taking a long trade here. However, if you look more carefully at this zone, there is no swing failure pattern or any type of rejection wicks. There is also no inner structure break in that area at all. Instead, there's a strong and aggressive price push towards downwards. This tells us that buyers at this level were not able to push the price higher in any meaningful way. These are small tips and details that you really need to look for before entering any kind of trade. Now let's drop back down to the lower time frames and take a look at our short trade idea. So, if you remember with this multi-imbalance and multi-swing failure pattern area, what happens here? Let's break this down for a second. For example, price could have easily continued moving higher and kept its bullish inner structure intact. This is exactly why checking lower time frame structure is sometimes very important. But instead, what happened here is we got a clear inner structure break and price crashed down toward to the PDL, the previous day's low. This ended up being a clean and a solid 2-hour trade opportunity at least here. As you can see, following liquidity, imbalances, and structure changes all together is extremely important when it comes to the trading. Okay friends, this was a good educational video. See you next time and please take care and have a great day. Completed the free trading course but still need more? My master classes teach liquidity, imbalance, and the market structure in detail. Combine them with forward and reverse trading using momentum superboxes and yo-yo cost average entry models. After that, you will master scalping with a one-screen free trading view indicator, a revolutionary trading system. Finally, you will learn to invest your profits using my 10-year swing investing with working agent system. Interested? Please see the video description.